Creamer Media's Mining Weekly Online is speaking to David Brown, the CEO of MC Mining. David, you've just reported your yearly results. Can you give us some highlights from the year?
Sure, Martin, good morning. Most of the highlights were really around the advancement of the Makhado hard coking coal project. The project was fully permitted during the year. We had an EA appeal that was overturned. We also secured successfully the last surface rights for the project again, which effectively means that we now have both the mining right and the surface rights of all 4 properties required for both Makhado Phase 1 and Phase 2. So real highlights and advancement on the Makhado project has really been the main feature.
And why is the Makhado project important to MC Mining and also to South Africa and the South African people?
Well, currently, Martin, there's no hard coking coal produced currently in South Africa, and effectively we would become the preeminent producer of hard coking coal. We have signed an offtake agreement with ArcelorMittal, and effectively they would take the bulk of the hard coking coal, so it'd effectively be domestically supplied hard coking coal for the domestic steel industry. So we think it's a good, positive South Africa Inc. story.
And that means we won't have to import that coal, and at this point in time, foreign exchange is very important to the country.
Absolutely, there will be a savings on balance of payments, but even more important than that, the project itself will bring much relief to an area that is really underemployed, and effectively also will bring additional procurement opportunities as well as equity ownership for local communities as well.
Are we talking about hard coking coal here? What is the price premium? What is the demand outlook? What does the steel manufacturing in the world look like at the moment? Is it positive?
Well, at the moment, obviously, with the trade wars between China and America, there has been an impact in terms of the pricing of hard coking coal. We have seen it come off around about 20% since June year end. But we think that the longer term pricing fundamentals are still very positive, and we will see those prices increase again over time.
What sort of premium does hard coking coal normally enjoy traditionally, not in exceptional circumstances?
Well, I would say probably around 150 to 200% sometimes. Effectively, if you look at API 4 around about $60 and hard coking coal around about $140, $150. So quite a significant premium, and that's why we're targeting this particular product.
And what is the actual date now that you're thinking of for this project, the first sod turning and to get this moving at Makhado?
Look, it has taken a significant amount of time to get all the permitting in place. We are busy effectively now with the fundraising aspects of the project. We hope to have that closed by the end of this calendar year, and as you say, sod turning in early 2020.
And funding, you have had some funding from the Industrial Development Corporation. What other funding are you looking for?
Yeah, we're looking for a combination of debt and equity funding, and essentially the IDC provides us with the debt funding aspect of it. We are looking for some equity funding, and we're looking at various options at this point in time, whether it be listco equity involvement or whether it be at the underlying project company as well. So we're looking at a combination potentially of both of those. But we are working on a number of initiatives at this point in time.
And what will the cost of this project be? The Phase 1, the movement to Phase 2, what sort of cost are you looking at to build this Makhado?
Well, one of the positives is that we will be utilising Vele's operating plant. So therefore it's more of a brownfields modification rather than building a plant from scratch. So we are able to save quite significantly on the capital expenditure required for Phase 1. Phase 1 capital expenditure is around about $30 million, depending on which rand-dollar exchange rate used. It's obviously been quite volatile, but probably give or take $30 million US for Phase 1.
What sort of return are you expecting from this project?
Look, based on long-term coking prices, we are looking at a payback period of less than 3 years, which is quite a positive return.
And the other aspect of your business, Uitkomst, what is the update on that?
Look, Uitkomst, we've had some difficulties over the last 12 months in terms of production output. That obviously was not positively impacted by the price changes of recent times as well. But I'm glad to say that we've had some management changes there, which we view as positive, and we are getting a more predictable production output as we speak now. So from our point of view, I think we will get the production profile more predictable and in line with what we anticipate. Obviously pricing we don't necessarily have control over, it being a price taker, and obviously we're looking forward to pricing improving even for the thermal aspects over the next 12 to 18 months.
And what will be the percentage of your thermal aspects once you are moving into the project development? Because you've got hard coking coal, which is the main target of this, but there's also thermal aspects to that project. And what sort of contribution is that going to make to the business?
We're viewing the thermal as a byproduct, so very much as a contribution to overhead costs. So our predominant feature will be being a hard coking coal producer. And if you look at the revenue split and the profit split, it'll be quite a significant weighting towards hard coking coal. So well over 60-70% will be weighted in terms of hard coking coal. Bearing in mind at ACOMS we also produce a metallurgical coal product as well, which goes to ArcelorMittal already. So we are leaning very heavily in terms of the, shall we say, the steel production space.
So phase one, you've virtually got offtake arranged. You've got like 100% offtake of the thermal coal or aspects of it, or is it the hard coking coal to ArcelorMittal, and you've got about 85% in the second phase as well? Or can you just update us on that, the offtake arrangements?
Sure. We've got 100% of the offtake for the thermal. We've got 85% of the hard coking coal for phase one, and we've got 50% of the hard coking coal for phase two. Quite clearly that gives us a little bit of additional hard coking coal in phase one, which we believe is a bonus because we'll be able to then obviously send that for testing to other steel makers around the world, because we certainly believe we've got a good premier product here, and then that'll obviously help to increase the customer base for us when we're lining up for phase two, because obviously there's still another 50% that would be required to be looked at there. If we do those projects in terms of phase one and phase two sequentially, then effectively ArcelorMittal have already started to speak to us in terms of some of the hard coking coal for phase two. So we think that the hard coking coal is no issue in terms of getting that wrapped up vis-a-vis offtake agreements.
And then the other aspects of your business, Chapudi. What do we need to be aware of with Chapudi?
Well, Chapudi, we just recently got the mining right at the back end of 2018 granted to us. And we think that's more of a medium to longer term prospect. I mean, quite clearly there's a number of studies that need to take place before we can advance that. We certainly believe with ACOMS as our operating asset at the moment, Makhado phase one and then leading into phase two certainly keeps us busy for a few years yet. And then obviously GSP and Chapudi would be probably the 5 to 10 year view.
And Vele, that's still on care and maintenance, but aspects of that plant, as you say, are going to serve as brownfield infrastructure for Makhado. What happens to Vele and the soft coking coal arrangement?
Vele resource will still remain intact. We will not be tapping into that at this point in time. You might be aware there's talk around the special economic zone up near Messina. Essentially that is a cooperation agreement between the South African government and China. We hope that that will be advanced over time, and then we'll be allowed to supply our semi-soft coking coal and thermal to the SEZ in the fullness of time. But you are right, initially we'll be upgrading and modifying the plant to produce both a hard coking coal and a thermal coal product.
And when will you award contracts for the upgrading of that? When will people know that they are going to build that project?
Certainly we hope before the end of this calendar year, or if at the worst case, early in the new year.
That was Creamer Media's Mining Weekly Online, speaking to David Brown, the CEO of MC Mining.